Good morning from Hong Kong. My name's Aidan Gregory, Senior Correspondent at InsuranceAsia News, and I'm here with Carlos Grijalva, Cyber Lead for Hong Kong Greater China at Willis. Welcome, Carlos, and thank you for joining us.
Thank you, Aidan. Thank you for having me.
We're here this morning to discuss the development of the cyber market in Asia Pacific. It's quite timely for us to be having this conversation, given the numerous large-scale cyber events that have happened in recent weeks, such as Jaguar Land Rover in the UK. How prepared are corporates in Asia Pacific for cyber attacks?
So currently we see that if we compare ourselves to 2-3 years ago, we've gone a long way, but we're still playing a catch-up game. We see that according to IBM's 2025 X-Files report, there was 1/3 of cyber incidents occurring in the region. So I think at the end of the day, there's a long way for corporates to take us to the right level. In Asia itself, we see that companies are investing each time more on cybersecurity and in their technology. But what they're missing is the resilience plan. What happens and how they need to act once there is an incident. And that's where us as Willis, as a broker, we're helping them to mitigate that risk and taking them to the next level of preparedness.
How have recent large-scale cyber attacks, such as Asahi and Jaguar Land Rover, impacted demand for cyber insurance coverage?
So each year we've seen a pickup of demand in cyber insurance. But these two last incidents, especially in Europe and in Asia, have led to a lot of demand and inquiries around the region. I think that at the moment, manufacturer and industrial sectors are the ones that are raising their hands and asking, how does cyber insurance work? Where can I get it? How much does it cost? In the past, we saw those sectors being very calm in regards to their inquiries. So after incidents such as Jaguar and Land Rover, where it took them out of production for 1 month, we see that companies and board members are aware of cyber is not just a data breach or a ransomware, but it's really a business continuity plan and how this can take us to the next level.
We saw from Jaguar Land Rover how many companies can be affected by a single cyber attack, not just the company at the point of failure. Is this event, driving demand in particular among like small and medium enterprises, not just large corporates?
So we see that how an incident where we thought it was going to just affect one company, it ended affected the whole country. We saw companies having a lot of layoffs, especially on the SME, as you mentioned. There are companies that depend on maybe one specific company, in this case, Jaguar and Land Rover, as their main client. And all this had to be brought to a stop. These clients are also inquiring on how is a cyber insurance going to protect me in case of an incident that is occurring to my client? And what are the risks and consequences that I face when supplying products to these type of companies? On the other hand, Jaguar is also, or companies like Jaguar are also asking, well, how do I protect myself from vendors that are going to be interconnected in one way or another from having those endpoints or open holes to enter our system, and be that the case or the reason because of a cyber incident or a cyber attack.
What role does the insurance industry have to play in building cyber resilience and guarding against cyber threats?
I think the industry itself has done very good in changing their mindset. Cyber is not a traditional product, and what we saw insurance being an intangible, cyber has brought it to become a tangible product. So you nowadays have insurance products that provide you with pre-assessment or pre-breach incident response services. What does this mean? It's basically they're allowing for your company to be in a better position in terms of preparedness, and going back to the first question, before you even buy insurance. And these are part of the services that you're getting with a cyber insurance policy. On our behalf, on the broker side at Willis, we provide them with quantification tools, benchmarking, for have them better prepared, also in case of an incident.
Isn't part of the difficulty with cyber attacks is that in their very nature, they're extremely difficult to model? Not just the financial loss involved, but also the reputational damage to companies that happens when you have a large-scale data breach.
It is, but we have specific tools at Willis that provide us to take all the different risks into account. And our tool looks into 150 different scenarios of the company having a loss for different reasons, as you mentioned. whether it is a data breach, whether it's a ransomware attack, whether it's a non-malicious incident like we saw in the past with CrowdStrike, for example. And all those are taken into account for us to share with our clients and for them to know exactly what's my risk, how much should I be buying, and which is the best insurer for my specific risk in regards to coverages that are provided.
Everyone is talking about AI at the moment, across all different areas of the financial markets. How is the rollout of AI technologies impacting the cyber insurance market?
We can look at it in two areas. One, the positive and the negative, right? On the positive side, obviously, a lot of companies are implementing it, and it's helping their processes move smoother and faster in certain areas. What does this mean? That companies also need to implement AI regulations or rules internally, so that information that's going into these AI tools is not later going to be disclosed, or that their security is good enough for there not to have a data breach. On the other side, we see threat actors using AI as well. So each time phishing emails, for example, become more sophisticated, given that they are using AI tools to correct them and to target specific persons with information that they are likely going to think that it's real versus fake.
It sounds like with any new technology, AI is creating an arms race in the cybersecurity industry between threat actors and professionals whose job it is to guard against cyber attacks.
It is, and at the end of the day, we also see insurers now asking for more information in regards to AI implementations in the companies. 2 years ago, this was not being asked. Right now, almost every underwriting is requiring information in regards to the AI implementation. When will it happen? Which type of tools will the company be using? And the governance around it.
The data privacy regulations in Asia Pacific are evolving quite rapidly. What impact are regulatory developments in the region, such as the cyber and infrastructure law in Hong Kong, having on the cyber market?
Okay, so once again, as we were discussing before, Asia is a bit behind on the regulations as well, just as the preparedness. Regulations in Europe and North America have been in place for several years. And now with the new bill coming into play as of January in Hong Kong, it means that for companies and their CISOs, they need to comply with certain regulations and obligations. Part of those obligations, insurance would be able to help them out, such as determining whether there's an incident and that incident is deemed for reporting or not. They have certain timelines that they need to meet, such as 12 or 24-hour reporting timeline to the regulator. This has brought, obviously, critical infrastructure companies to inquire more about insurance. But we know for a fact that at the end of the day, it's not going to remain just in these 8 sectors. It will drop down to all their vendors. So any IT vendor or any vendor that works with critical infrastructure companies are likely going to be required to have some sort of cyber protection or follow certain cyber guidelines for them to also comply at the end of the timeline.
Thank you for joining us this morning, Carlos. It's been really interesting to hear your views on the development of the cyber market in APAC.
Thank you, Aidan, for having me.